For an instant audit on this, we go to Mike Reed of Dow Jones Newswires and Jeff Duncan of Duncan Financial Management.
Only two other people.
And hey, Jeff, you there? We got you? Jeff's a little disconnected there, so we'll go to Mike first. Okay, so the government's taking in more through corporate taxes, but are they taking in more because we've raised taxes, or are they taking in more because business is rebounding?
Probably more. It's not raised taxes, it's businesses rebounding. The tax receipts are going to be a problem for a while, particularly for the individuals as opposed to corporate. You can't get away from that deficit. You just have to work your way through it. Now, there's been a disingenuous argument going on as to whether people say you need to cut corporate tax, you need to cut small business tax, you need to cut income tax, and therefore somehow the deficit will go away. No, it won't. The deficit will get bigger. The difference is the argument of how you stimulate an economy. You to do it by tax cuts, or you do it by spending increases, stimulating the economy. That's where the argument is. But anybody who stands up and says
cutting taxes will close the deficit.
Yeah, it won't. It'll widen
well,
the
but
deficit.
The theory is if you cut taxes, then businesses grow, thereby increasing the revenue that flows in from those
Sure,
businesses.
and there is an argument to be made there. But if you look at every Western industrialized country at the moment, every country in the OECD, they all have the deficit problem, and they all have the lack of growth problem. You have to run a deficit to get out of the situation. The difference is how you run that, whether it's via tax cuts or spending, or both.
Yeah, but Jeff, we're sitting next to Mr. Keynes here. No, Keynesian economics, we're back in the first year of college. But real quick, that point, we just had the interview, Conor McShane got an exclusive interview with the Prime Minister of Ireland, and they've actually cut corporate taxes in Ireland, and they've cut spending, and they've raised taxes in other places to close their deficit. What do you think of what you just heard Mike say and what they're doing in Ireland?
Well, I would like to see taxes cut, and I'd like to see spending cut and see what happens. This has not been on the plate. Many people don't talk about it. But, corporations here in America pay one of the highest tax rates. Why not cut corporate taxes, and why not cut individual taxes? And holy cow, it'd be interesting to see if the government actually decreased spending. But for that to be enacted, that's going to be somebody that's going to have to step up to the plate and take a lot of abuse to cut spending. That would mean less government jobs,
Sure.
less pension money.
Jeff?
And at the same time, yes.
When you said that corporations in the United States have the highest tax rates, the editor of Dow Jones Newswires Global was shaking his head no, so have at it. Why do you say that?
The headline corporate tax rate is high, no doubt. But the reality is that very few, particularly larger companies, pay that rate. They pay somewhere between 10 and 20%, even though the headline rate may be 30%. But I do agree with Jeff that for small businesses, yes, their tax rate is high.
Okay, so
because they don't have the fancy accounting departments who can wiggle their way out of it.
And small businesses are the engine of this economy, right, Jeff?
That is correct.
And
we
they
got to
need
get
some
small
help.
businesses. Absolutely. And with banks not lending money to small businesses, we're at a standstill at this point. So somebody needs to step up to the plate and say, we need to make some significant changes to get the economy going, and at the same time rein in these deficits, or we're really going to be into a Greece situation at some time in the future when people quit buying our debt and interest rates start going up for the federal government.
I'm glad you brought up the Greek financial crisis, and the U.S. Are constantly flooding the debt markets. Do you foresee, Mike, an era where people really would stop buying our debt? Because everyone, you said earlier, we're all waiting for China to really slow down. And when that happens, that's going to frighten a lot of people, isn't it? And they're going to think, oh, good old United States.
I certainly don't think you can carry on assuming that people continue buying your debt. However, what else are they going to buy? I mean, this is the problem for European nations which have large debt piles like the UK. If you're a central bank, you need to hold US treasuries. You don't really need to hold British gilts or German bonds. I mean, you have some, but it's certainly not a significant part of your portfolio. Therefore, the amount that they borrow at is a much higher rate. That's why the US rate of... Now, that rate is artificial because the US is able to attract that. But you're right, you cannot continue assuming that the Chinese will continue to come and borrow this money. So the next 2 years are pretty critical in getting that deficit down, because they can't just keep going to the market and expecting this endless demand.
All right, Mike and Jeff, thank you. We're going to stop right there, and I'm going to move to discuss GMAC, but we're going to have Jeff back in a minute, and Mike as well. For an instant audit on this, let's go to Mike Reed of Dow Jones Newswires and Jeff Duncan of Duncan Financial Management. Jeff, I'll start with you. Even if we get out, we sell our 27% stake in Citi, we're still on the hook through the FDIC insurance backing of their toxic debt, aren't we?
Well, not for their toxic debt. That's backing up, people that are putting deposits in money market checking and CDs. I think Citi at some point has decided that we need to do something because they're probably getting quite a bit of pressure from their big investors and the U.S. government. I find it very interesting. I mean, I never would have thought this 2 years ago, that we would be saying that the government's trying to make a profit on owning shares of Citi. That just seems outrageous 2 years ago.
We've got a $45 billion investment in Citi, I think it is how much we gave them. But we are backing up. I thought the FDIC, there was insurance through the FDIC, not just on deposits, but didn't we? We're backing up debt through an FDIC program at Citi as well, aren't we?
Yeah, there was some.
Yeah,
the 45 billion has come down. There was some backing up of some of the toxic assets, but a lot of these are the ones that Panda's trying to get off the books. What is a little startling about Citigroup is that if you look at their balance sheet, what they deem to be non-core assets amounts to about 540 billion, which is about a third of the balance sheet. So essentially that shows the legacy with which Panda had to deal with, of having this behemoth with multiple parts, no coherent strategy. And when a third of your balance sheet is essentially non-core, it's a pretty big turnaround job.
Jeff, let's play the speculation game. And I like to pick on Vikram Pandit. I mean, in one of the reads this morning, we're talking about this may be a bullish statement, and I said, or it may just be bull. But let's talk seriously for a second. We had a report yesterday in the Financial Times that Barclays is looking to purchase a major bank in the United States. How about a Barclays-Citi marriage? You've got Bob Diamond already, in good favor with regulators in the United States. Would it be a good deal? Would this be a terrible deal, or am I way off target?
I don't think you're way off target. I believe Barclays is probably seriously looking at some of the units of Citi, but for a complete takeover, unless they get it at a significant reduction than its current price, I think they would shy away from a deal such as that. But maybe the units may be a better idea for Barclays. As your guest was mentioning, there's just been a whole bunch of stuff put together at Citi, and it's just going to take some time to start to tear down that big corporation.
Mike?
Yeah, I agree. The problem, Barclays have said they want a deposit bank, and they're not particularly fussy about the region, although obviously the West Coast and the East Coast would be more desirable. Citi, the problem with Citi is it does have that deposit base, but it also has this hodgepodge of all these other businesses you'd have to get out of. And frankly, the Citi retail franchise is not strong in the same way that, Chase or some of the other, you walked at Bank of America,
Wells
Fargo. It's just not that strong, particularly in the tri-state area. So from a northeastern view, but I'm not sure it's strong anywhere.
How is it ever going to get over $4 a share? I mean, they have struggled when other financials have risen dramatically.
Well, some of his expectations of profit are quite startling or significant or exciting if he delivers a message of how he's going to get there. But the problem is that when people look at Citi, they see no clearly defined message. I mean, you know what Goldman Sachs is, you know what JP Morgan is, you know what Bank of America is. It's not, if you walk out on the street and you ask the average person, what is Citi? What does it represent? What are its key businesses? What is it strong at? They'll probably sort of roll your eyes at you and carry on.
Got to cut you off there, but Mike and Jeff, thank you very much. When you say we know what Goldman Sachs is, we know that Mr. Taibbi thinks Goldman Sachs is what, the vampire-sucking octopus? All right, we're going to move on to other news right now.